And it's also a reminder that a lot of the rationale for companies paying attention to anything to do with sustainability is because of the risks of not paying attention to it.
Welcome to Grounded, the Sustainable Business and Careers podcast, where we explore how professionals, especially those early in their careers, can make a positive impact on the planet through their work. I'm Michael Jordan, a professor of management and sustainable business at the University of Oregon's Lundquist College of Business. Each episode, we explore how purpose and practicality meet in business, bringing you ideas you can use to build a meaningful, sustainable career.
That 88% of corporations see sustainability as a value creation opportunity. And you don't need a government to tell you to take advantage of a value creation opportunity. If they see it, they'll just do it. It's good business.
My guest today is Bob Willard, a leading expert on sustainability justifications, reporting frameworks, and procurement. Bob applies his business and leadership experience from a 34-year career at IBM Canada to engage the business community in proactively avoiding risks and capturing opportunities by using smart environmental, social, and governance practices. Bob and I talk about things like procurement practices, working with suppliers, metrics of sustainability, meeting colleagues and decision makers where they are and helping them with their priorities while still working on sustainability, and some of the differences between what's going on in the US and what's happening elsewhere around the world and how that plays out in the prioritization of sustainability initiatives. Bob Willard is a pleasure to have on our podcast. Let's get into it. I'm super excited that you are here to talk with me, Bob, and thank you so much for joining the podcast.
I'm happy to be here, and I think we can learn from each other, Michael.
Let's do it. Let's have a conversation. I think for folks like you who have just been leaders in this field for so long, and have probably seen it all by now, I feel like I need to start with a sort of a reflection question about the kinds of priorities that you've seen recently that maybe have been evolved from earlier experiences with companies tackling sustainability. Are you seeing new things, or are you seeing kind of just new versions of the same things?
Yeah, it's new versions of the same things, and sometimes much more attention being paid to some dimensions. So specifically, climate change,
Mhm.
for a whole bunch of excellent reasons, is getting a huge amount of attention. Um, and it's also a reminder that a lot of the rationale for companies paying attention to anything to do with sustainability is because of the risks of not paying attention to it. So the risk side of the justification for doing something, if you didn't do it, bad things are going to happen, is actually a little heavier and more important than the opportunity side, which is if you did it, good things are going to happen, especially financially. So my claim to fame is kind of the business case, and I used to really focus on the opportunity side, savings, more revenue, all of that good stuff, employee productivity. Um, but the other motivating factor for organizations is risk mitigation and the environmentally, even socially related risks these days that are facing corporations are significantly stronger than they used to be. Um, Depending on the jurisdiction, it may not be climate, it may be water. I was talking to a bunch of people that run the airport in Istanbul, Turkey, uh, 2 days ago. And I asked them which of the various crises that we're facing, um, climate crisis, water crisis, food crisis, earthquakes, social inequities, all of those things. There's a whole laundry list of them. And the one that they immediately zeroed in on was water.
Hmm.
So in some parts of the world, that's a huge issue. For me, near Toronto with the Great Lakes right here, that's not a big deal. But for them, it was huge. So
Yeah.
some of the focus that corporations and organizations put into sustainability related issues has a lot to do with the sector that they're in, where they are, and the encouragement that they're getting from their stakeholders to pay more attention.
Are you finding companies or organizations to have gotten better at engaging stakeholders on these topics to try to figure out what's on their minds?
They say they are. I'm not sure. I'm not sure. There's a lot of lip service being paid to purpose and sort of migrating from the purpose of a corporation being to maximize shareholder wealth to maximizing stakeholder well-being and including a laundry list of stakeholders that the Business Roundtable suggested that we should pay attention to, the customers and the employees and the communities, the environment, society, um, investors, governments. So there's quite a laundry list of stakeholders. Companies say that they're doing that, um, but you have to take a look at their actions. And very often it's more to satisfy investors still than it is to pay attention to the impact of their operation on some of those other stakeholders.
Hmm. Are you seeing, I'm wondering what you're hearing about what I'm imagining is the changing conversation from investors, right? It seems like there was so much focus for years from within the investor community to take this seriously, to expand the engagement of other investors, especially institutional investors, to pull through sustainability and climate change requirements to their expectations for the companies and their holdings. That seemed to get so much traction. And then we're at different times now. There have been shareholder resolutions to start to try to pull back from ESG as a conversation. I'm wondering if companies are dealing with investors the same way, or if they're still even hearing climate change from investors.
Yeah, not so much as they used to, at least not that we hear about. So there's a thing called greenhushing that's going on, where companies are still paying attention to the things that we were encouraging them to pay attention to from a sustainability point of view, but they're not talking about it as much as they used to. They're not going public about it as much as they used to. They're not taking advantage of speaking opportunities at big gatherings of corporations like sustainable brands and so on as they used to. In fact, those organizations are having trouble getting speakers because they are setting themselves up with a big target on them for criticism by the current administration about paying attention to stuff that the current administration doesn't think is appropriate. So it's it's a chilling factor going through everything. But the good news is there are more and more reports that say that doesn't matter. The companies are continuing to do what they always wanted to do. They're just not talking about it as much. And in fact, there were a couple of reports that came out in the last couple of months that were really quite encouraging. I'm just going to read a couple of the highlights from them. There was an HBR, Harvard Business Review article in September that said that 85% of leading global firms are sustaining or accelerating their sustainability efforts, including American ones as well. And
Okay.
there was another one by Morgan Stanley, Sustainable Signals Corporates 2025. And it said that 88% of corporations see sustainability as a value creation opportunity. And you don't need a government to tell you to take advantage of a value creation opportunity. If they see it, they'll just do it. It's good business. 83% say that they measure the ROI of their sustainability activities. And if it's a good ROI, they're going to do it. And that just keeps pointing back to the fact that the business case is a bigger driver than any government regulation is going to be. And another survey here. 99% of CEOs say that they will maintain or expand their climate, environmental, and social commitments. That was a survey of 2,000 CEOs global, but a lot of Americans in there. And 88% said that the British case for the business case for sustainability is stronger today than 5 years ago. And that's because of the risk factor being higher today than 5 years ago on a lot of these issues. And just the last one here. This is by Kearney. CEOs are staying the course on sustainability. 92% of CFOs say that they will invest more in sustainability. CFOs.
Mhm.
So chief financial officers see the financial benefits of this. And if those are there, you don't need a government to tell you to do it or not do it. You're just going to do it. It's a smart business. Whether you talk about it publicly is another
Mhm.
issue. So when you see companies backing off from being quite as open about what they're doing and why they're doing it, it doesn't necessarily mean that they are not doing it. In fact, it looks like it's just the opposite,
Yeah.
which is encouraging.
I mean, it's sort of a silver lining, and I gotta believe it's better than disinvesting, right? It's probably, although we also like it when people talk about their success stories for the inspirational value, right? And setting leadership,
Right.
quiet leadership is sometimes a little harder to rely on for achieving the scale and pace that we need to solve the planet issues, right? But we'll
Yeah.
take it.
Yeah. And there are different motivators. In Canada, we are so dependent on the US for a lot of our exports, our trade, and so on. But with what's going on with the tariff wars, we're looking for other trading partners, and some of those are in Europe, and some of them are in Asia. And those jurisdictions are starting to ask more pointed questions of their suppliers about how they're doing on climate change and other sustainability related issues, modern slavery, etc. Then perhaps we would be asked by customers in the States these days. So if we want to diversify who we're trading with, who we're doing business with, we need to get our act together so that we're more attractive suppliers, which is a wonderful motivator for Canadian businesses to pay more attention to issues that are going to be important to their customers.
Yeah, well, in many ways, we're all thankful for the scaffolding that we're still part of. US based multinationals are still subject to the international best practices and requests and requirements,
Exactly.
right? So that still creates a scaffolding, at least for global companies that are doing business in different parts of the world, they know that they need to take into account what works and what is expected in those different parts of the world.
Yeah, global trade is actually a nice framework to encourage companies to pay attention to not only what their jurisdiction is asking of them, but what other jurisdictions are. So if you're a big company in the US doing business in Europe, if it's enough business, you're going to be asked to use the same reporting structure that European countries do, or else you don't get to trade there anymore. So
Yeah,
um, I think the voice of the customer, the market force of the buying power of governments as well as other corporations and other jurisdictions um, is a great catalyst for companies to continue to pay attention to and do better on things that are related to the sustainability factors.
thankfully. Yeah. Well, and when you see the companies and organizations taking into account those different factors, the reasons may change, but especially as you were mentioning earlier about the focus on climate change and risk. Can you say a little bit more about how you help companies and other organizations to develop their initiatives, to prioritize? I want to just look behind the scenes a little bit. How do you help companies and organizations to figure out what to do once they understand the importance?
Yeah, I don't work with companies quite as much as a lot of
Okay.
folks do in the consulting business, but I help people who do um, be perhaps more effective change agents, more effective consultants, and so on. So basically, you go through multiple stages. I think the first thing to do is to figure out how they're already doing on all of the core sustainability, environmental, and social things that we would normally expect them to pay attention to. There are only 18 of those core issues, and they should do a self-assessment. Even if they're not going to report on it publicly, do it internally. See how they're doing on all of the environmental things, energy, water, material, waste, all that kind of stuff, how they're treating their employees, their contribution to the communities, and so on. So I've got a little tool called the Basic Sustainability Assessment Tool. There's GRI, there are the SDGs, there are lots of frameworks out there. I put one together that's more appropriate for companies looking at themselves for the first time, especially if they're small and medium-sized enterprises. It's free, it's open source, and it covers all the bases that you would have hoped that they would pay attention to. So if they were to self-assess, they're going to get a score on all of those 18 things. And there may be some scores that they would like to improve. So the second step is to decide two or three things that they want to improve. Could be energy efficiency, could be something to do with waste, could be something to do with greenhouse gases, whatever. But you can't do all things at once, zero in on them. And then do a cost benefit analysis of what's in it for the company if they were to do that. So treat it like a hard-nosed business person and put it through the same thing that you would put any project through, which is a cost benefit analysis of what's in it for the company if they were to do that. And the Sustainability ROI Workbook, another free open source tool that I've got, helps them do that in the traditional way that any CFO would expect it to be done. So that gives you a chance to compare projects and see, well, yeah, we should do all three, but maybe let's start with this one because this is the best one to start with. So you do that, and then you measure after you've done that how you have improved your overall sustainability score, going back to your first one, and you just keep working like that. The point of that sequence is, which is assess, decide, cost benefit analysis, and then do it. The point of that is that the business case for doing it needs to be strong, or you're going to have very weak support from executives to do it, and it won't happen. So you want the executives, the hard-nosed business financial people in the organization, to be as excited about this as you are, maybe for slightly different reasons, but maybe excited enough to even champion the damn project so that you get this thing front and center as something which is good for the world, good for the company as well. This isn't a tree hugger activity. This is a hard-nosed business activity. And that mentality is something that earns you trust and credibility in the organization. And the next time you go back and suggest another thing, you're going to be listened to with a little bit more attention than perhaps you would have initially.
Hmm. Yeah, there's no dual track approval process for the game, especially the game changer initiatives, right? You can nibble around the edges in
Exactly.
that gray area, but if you want to really make a difference, you need to sharpen your business tools.
Exactly. And part of the decision that you make is not only driven by the financials, but also how is this project going to help you accomplish strategic goals that you've set for yourself? Some of them may be very sustainability related, and some of them might not be. Maybe they're revenue based, or they could be brand based, or whatever. And the assessment tool that I mentioned gives you a chance to put some weight on that factor as well as the other factors so that you're making sure that this is relevant to the priorities of the business at that time. If you can't connect the dots between what you're suggesting they do and what they're already going nuts trying to do, then you're probably not going to get very much attention.
Sense. I'm seeing a lot of attention and sustainability focused in the supply chain for, especially for product companies, right? I think it's driving. Some companies have been really good at supplier relationships for a long time. I think one of the side benefits I see in sustainability activities is it's a topic that you can discuss with your suppliers that also can bring you closer, more engagement, more innovation, right? With suppliers on to the benefit of the company. It's just one of those topics you can have a meeting about that won't exacerbate the us versus them kind of supplier relationship, right? I've seen it bring companies and their suppliers together.
Yeah, it's a great opportunity to collaborate and innovate together as you're trying to work on issues that are important to both of you. Um, but I don't think that dynamic is as prevalent as it needs to be. I think a lot of what customers normally ask about understandably, are price and the attributes of whatever goods and services they're acquiring. And of course, that makes sense because the procurement people are probably being asked by some department, some user department, some client department to go find the best thing at the best price that is going to satisfy the needs that they have. Whether it's equipment or something else, it doesn't matter. And they've been rewarded for doing that. Lowest price, best product performance. And now we come along and say, hey, what we'd like you to do is to pay attention to these attributes as well as the ones that you were asked to. So we need to help them do that. Sustainability related attributes of the goods and services. And we need to encourage them to ask about the company that's producing those goods and
Mm,
services, the supplier itself. And are
right.
they paying attention to reducing greenhouse gases, for example, or eco efficiencies that are important to you? Because now companies are accountable, mutually accountable, for what's happening in their supply chain. Drives them nuts, but they are. So, how the heck do they influence that? Well, they have to financially incentivize companies to pay more attention to things that they need them to. So if they're concerned about scope 3 emissions or greenhouse gas emissions on the carbon footprint of the products that they're purchasing, then they need to kind of ask the supplier, how's it going on reducing your greenhouse gases? Have you got science-based targets? How's it going? Then there's a little questionnaire that they can ask them that scores them on how
Mhm.
they're doing on that. And then you weight that score heavily enough in the bid appraisal to get their attention, at least 10% of the weight. So you not only ask them, you score them and use that score to help them see that this matters. We're not just asking for the hell of it. We're asking because it's really important. And if they see that there are enough points associated with that, that it's worth their while to pay attention to it and improve on it, or at least be better than their competitors, they're going to invest a little more time on the issues that we want them to so that they can win more bids.
Yeah. Yeah. If there's one part of a company that's gotten really into scorecards, it's purchasing. So
Yeah, for good
it's a
reason.
great place. Yeah. Let's use
For good
the
reason.
existing tools. You kind of
As you know,
also,
I spent 34 years of my life in IBM Canada, and many of those years were in marketing. So I was on the supply side of the equation. I was the supplier, and I was dealing with buyers, especially big ones that put a request for proposals. And I remember one time I was the account exec for the Alberta government. I was stationed in Edmonton. And we got an RFP from them that had a strange question in it. They asked us, to what extent is your company contributing to the economy of Alberta? I
okay.
thought, what the heck? I mean, we're proposing a computing system here. I mean, we're not trying to, save the province or help the province that way. But anyway, there were 13 points associated with that particular question, and that was a lot of points for that particular RFP. And I thought, geez, I guess this is important to them, so I guess I better figure it out. So I put together the IBM in Alberta story, which I never would have done if they
Oh,
hadn't asked it and had a lot of points on it. And frankly, it was a much better story than I'd ever thought it would be because we were directly and indirectly contributing a heck of a lot to the economy of Alberta. But my point is, if a customer asks you about it and heavily weights your answer, all of a sudden you get the supplier much more interested in paying attention to something than if you just sort of ask it, but it's not at all indicating that it's going to count when the bid is being appraised.
yeah. And for all those buyers out there, I would pull that thread even a little further to say reward those companies that have good answers, right? I like that. I mean, it should show up in the scorecard, right? If there's enough points allocated to it. But and companies by now have been really putting a lot of effort and investment into sustainability related performance. I feel like we are in the phase now where that needs to be rewarded. Um,
Yes, I agree. I agree. And we need to package all this stuff up so that it's easy for the procurement people to do, even if they're not really into sustainability. Um, so I've got a toolkit for sustainable procurement. I've got another free and open source, another toolkit for net zero procurement that zeroes in on greenhouse gases. And I really encourage companies to send this questionnaire, whichever one they want, to the suppliers ahead of time.
Hmm.
Send it to all their suppliers and say, by the way, we're going to be asking you these questions if and when you decide to bid on one of our RFPs. So if you have any trouble figuring out how to do the answers, let us know. We'll give you some help. But you should expect that this is going to be the new normal, and we are going to score you on your answers. And by the way, if you win the bid, and we then verify your answers because that's when we're going to do that, or expect you to do that. If your answers or your score is out by more than 10% from what you thought it would be, you lose the bid. So don't screw around with this.
Yeah.
So you put some teeth in it, and I really think that we have an opportunity to use the purchasing power, especially of governments, but anybody, universities, as a huge catalyst, market force for companies to pay attention to things that are important to their customers.
Mhm. That makes sense. And even outside of procurement events, this should be a thing you're starting to ask your suppliers and tracking their company practices and what they're doing for the products or services that you're specifically buying from them. Um,
Exactly.
which kind of you know, in raises the question of those types of metrics on an ongoing basis. And I'm wondering, as you and I were at both speaking at a conference, I don't know, many years ago, for a sustainable brands, um, I don't know, I think it was a specific conference about the new metrics of,
New metrics, right?
yeah, sustainability. And it makes me just think there's probably always, I don't know, maybe we've done all the metrics. What do you think? Are there company or organizational metrics that you feel like have evolved to really represent those needles that we want moved? New metrics?
I think the metrics are fairly consistent. The emphasis is what's changing. So there's quite a portfolio of metrics that we normally expect companies to pay attention to when they're reporting or disclosing how they're doing on these things. But drilling down, for example, in waste, not only waste in general, but plastics in particular, um, is something that, and then you get into, especially depending on the sector, even more detail of what the wastes are, hazardous, etc. Um, so the umbrella terms are still there, the umbrella metrics are still there. When you start to drill down in them, there's more of that expectation these days than there used to be. Uh, so yeah, I don't think there are any tricky metrics. As I think you know, I was involved in something called the Future Fit Business Benchmark, which we developed a few years ago as the only science-based benchmark that allowed organizations to compare where they were on all of the 18 things compared to what best available science said they should be doing on all of those 18 things. And that required us to do some background research to see what all of the other frameworks out there, GRI and CSRD and ISS. At that time, there wasn't an ISSD, but anyway, there were about a dozen frameworks. So we took a look at all of them and said, what are they asking about and how do they ask about it?
Mhm.
And those metrics are pretty consistent these days. They haven't changed that much, although there's a little bit more attention to some of the risk-related metrics. But the major categories are pretty consistent.
Okay, that makes sense. And one of the things I like about the stabilizing of the metrics is it goes with the focus that many organizations have on having good performance data. Uh, and I've started to see already even more opportunity once you get into the data space. That's where I think there are opportunities for my students coming out of undergrad with analytical capabilities to be able to deal with data, to be able to solve the kind of how do you have good data in your reporting type of questions? How do you have good performance data? And how do you use data to come up with insights for new opportunities? It has translated into a job path for early career professionals in some very real ways, which is pretty cool.
Yeah, I think that's really, really a good place to start, which is, as you said, on the data side. And very often, if and when a company decides that they want to produce a sustainability related report or something that akin to that, um, it's a huge effort for the organization to pull together all of the backup data to whatever it is they're going to talk about in the report. And that's where they need help. So that's a great opportunity for people that understand this stuff to be able to help an organization put together their report, gather the data. The second thing is how you express the data. So you can express it as a hard number, or you can express it as a percent of how close they are to where they want to be or where best available science says they need to be. So that's on all of them, whether it's waste, greenhouse gases, or water or whatever. And the percent gives you a sense of progress or lack
Yeah.
of it as to where you are. So it's not only data, but it's decision ready data, which is even more important.
Yeah, data with targets in mind and being able to manage the gap between current performance and that target is a much better practice, right, than just having data to describe how things are going or
That's
what's
right.
happening.
And whatever that gap is may be big enough to warrant more attention, more action, more a project that's going to help you move in the right direction. So that's the backup justification that you need when you're making a recommendation that the company should be doing something that it's not already doing.
Hmm. Well, then, apart from data skills and analytics and thinking through what the data are saying about opportunities, what are there things that come to mind um, for you about other recommendations you would make to students or who are in, at that undergrad level, thinking about what's going to make them attractive as employers, what's going to make them able to contribute? I'm wondering about skills that you feel if you could wave Bob's magic green wand or even just a magic wand of any color, what skills would you want undergrads acquiring that would help them with the scale and pace of these planet issues?
Wow, what a great question. Maybe the first one is really personal. They need to, you can't do everything. I mentioned there are kind of 18 things that you might want to pay attention to if you're a company. Um, you can't be good at all of them. So you need to kind of zero in on which ones you care enough about to invest some energy in being good at. So it could be something on the social side. It could be something on the environmental side. Um, but you need to be kind to yourself. You can't do everything. So get good at something that you personally really care about. In my particular case, it's climate change. So I'm really into that in my procurement efforts, etc., with organizations. So decide what's really worth investing your time, money, and energies in. Second thing is get really good at it. And that's where the kind of courses that you are providing really help them have a credential that says, I know what I'm talking about. I'm not asking you to do something stupid here. I've thought this through and I understand this. So you can trust my recommendation. So get credible and stay credible because things change quite a lot. And then the third thing is get good at, I call it meeting them where they are. So if you're trying to get an executive who's being criticized, pressured on a number of different fronts, and has really big challenges. For you to come along and suggest they also pay attention to some sustainability related thing is probably going to be a non-starter. So what you need to do is change what you're asking them to do from a goal or something new as to an enabler of something that they're already going nuts trying to do. So connect the dots between the so what of what you're doing to something that they really care about.
Hmm.
So in Canada, for example, the federal government came out with mandate letters for the whole government in May, and they had seven priorities. None of those priorities had anything to do with climate change or reducing greenhouse gas emissions or any of that stuff. So for those of us that care about that, we were kind of disappointed, especially because Mark Carney, who's the prime minister, understands all this stuff. We thought he'd be more forthright. Most of them were economically related. So what I did was I took the proposal that I'm working on with the federal government that has to do with using net zero procurement, and I showed if they did that, how it would contribute to all of those seven
Mm.
mandates.
Yeah.
Connect the dots, meet them where they are. If they think that's important, show how your solution, and maybe you don't even use the word sustainability, is going to enable that solution. That's the translation we need to be better at. Even if we don't agree with what they think is important, we need to show how we are going to help them reach that anyway. Build the relationship and the trust. And then you can come back and extend that perhaps. But too many people in the sustainability arena have wonderful passion, which is, of course, really, really helpful, keeps your batteries charged. But think that people should be doing it for reasons that are more pure than they normally are. So I don't worry about motivations quite as much as I used to. I just need stuff done. Whatever. Actually, there was a great quote from what's the guy's name? I forget his name. In the New York Times, that when the big guys are starting to do the right things for the wrong reasons, we're making progress.
Okay.
So
Fair enough.
I totally agree. I don't care why they're doing it, just do it for God's sake.
Yeah.
So um, I think we have to get more comfortable with that and become more effective change agents because we are helping them be better at what they care about by helping them with strategies that we care about. But they're strategies, they're not goals.
Yeah. I like that. Well, and meet them where they are. What a great principle, Bob, and thank you for meeting us where we are on this podcast. It's just been such a pleasure talking to you.
Likewise, and thanks for the opportunity. And I really applaud what you're doing, Michael, and all the good work that universities like University of Oregon and universities all over the world are really doing amazing things on this these days, and equipping future leaders to be much more competent on these things and being able to use them as good strategies for their business objectives. It's exciting.